Daniel Petrie, welcome to The Business.
Thanks very much. Thanks for having me here.
Now, you have a fairly broad scope, investing across 7 venture capitalist funds, 3 of the biggest in Australia. Have you seen a lot of money in your space being thrown at the promise of cryptocurrencies?
I don't know that any venture capital firm would like to use the term thrown at, but a number of VC firms have been investing in sort of Web 3.0 more broadly, which includes crypto currencies. Not so much cryptocurrencies, to be honest, more the platforms underpinning, the blockchain platforms underpinning it. But yes, there's been money invested across crypto as a sort of class, or Web 3.0 as a class of investments. Not all funds have done it, but a number have, yes.
And as a result of placing money into this class, I suppose you say, have losses built up as a result of what we've seen with FTX and the spin-off from that collapse?
Well, firstly, I think there's been a general sort of pull down of valuations across the tech sector, which implicates all investments across all VC firms. So you've seen already some corrections in the most celebrated in the non-crypto or non-Web 3.0 space being Canva, as that was written back, but a bunch have been written back. So yes, there are write-backs occurring now in the Web 3.0 space. You probably won't see them in sort of written form until this quarter is completed, and then the venture firms publish their end of quarter results, so the end of December quarter results in January, roughly end of January, early February. Then you'll see the impact of any investments they're carrying. And clearly anyone who's carrying any Web 3.0 investment will probably need to look at some revaluation. In a couple of cases, it may not be much of a degradation in value because they're in a particular part of the space where it hasn't been impacted. But anything that's anywhere close to a crypto exchange, in the FTX example, or cryptocurrencies, will have to see some serious revaluations in the portfolio, which, as I said, will happen. You'll see it in the sort of January, February reports.
Anecdotally, what level of devaluation are you expecting them to book around that period?
Look, I think it's fair to say that Web 3.0 or the crypto space is the Wild West of tech investing. I think that's fair. Having said that, not all investments are as arguably irrationally valued as some. So you have to be careful you don't sort of throw the baby out with the bathwater. But having said that, I think you'll expect to see a number of quite heavy losses or complete write-downs in anything that's close to being a currency, a cryptocurrency or a crypto exchange. So quite severe, and more severe than you would have seen in the traditional tech revaluation space, where the valuations, public and private, have come down anywhere from sort of 30 to 70%.
And you mentioned Canva, of course. That's one of Airtree's biggest investments. It was one of Australia's most prominent unicorns. Are you still confident in the outlook for that company?
No question. Canva is a world-changing company. Their revenue growth continues at a pace. They are very profitable. They have very high retention of their users and their growing users. And at the same time, they're layering on more products. So there's no question in my mind that regardless of the valuation methodology, Canva will be worth more than the celebrated $40 billion US valuation at some time in the not too distant future. It's a generational company that you only see happen once in a generation, and they're outstanding performers as individuals, as a company.
Well, as the sheen comes off tech and the crypto sector, as you call it, Web 3.0, is venture capital a little more cautious about putting money into startups in Australia at the moment?
So I think there's a couple of answers to that. Firstly, at the meta level, technology will play a more important role in people's lives next year than this year, in 5 years more than 4 years. So technology will continue to be implicated in change across every job, every role, every industry. So that meta sort of change of the economy is not going to stop. Now, how you value that has clearly changed. And so, yes, you've seen a revaluation of technology appropriately because there was a bubble occurring in some valuations in some company sectors. But that will also work itself out over a period of time. And I think you'll see that, in fact, investing now, if you had a fund that was raised in 2022, then that will be a very good vintage fund because it will be investing in companies at probably more balanced valuations than happened in arguably mid to late 2021. So it's a good time to invest. It's also fair to say, I think, that the cadence of investing across all the major VC firms has come back from what was happening in 2021. By that I mean the number of investments being undertaken. People are still investing, and there's a lot of dry powder, but the comment you made, the question, the cautiousness, if that's become an issue, to be a bit more cautious. Valuations have come down, so the opportunities are arguably better, and people are sort of stepping back in. There's no example of the venture capital community as a asset class pulling back from investing, just being a bit more cautious.
Well, does it have any implications for innovation or startups in Australia at all?
No, I don't think so. I think if you break that down into, if you're an early stage startup and you've got a compelling opportunity, then you will get money today as well as you could have got money a year ago or 2 years ago. Because investing today, the investors are looking at sort of a 6 to 8 to 10 year investment period. So they're not really perturbed or concerned about this sort of revaluation that's going on right now. Now, if you're a much later stage company where you were maybe a year or two from an IPO or a trade sale, then your valuation will have come back and may not get back to where it was at the peak of the market. So it's really a timing of that investment and when people thought that investment would mature into actual cash in people's hands. So the later stage investments, in many cases you're seeing flat rounds, so not up rounds, flat rounds as opposed to the normal process of up rounds, and some down rounds. In the early stage, it's pretty much as it was, which is great opportunities with great founders and innovative ideas are getting funded. Arguably, it's slightly less pre-money valuations than before, but again, people are thinking about the longer term here, about the 6, 8, 10, 12-year cycle, not the 2-year cycle.
And where do you look for investments? Are there any particular sectors, areas that you have particular interest in?
Well, yeah, so now I'm no longer an active partner at the firm I founded, Airtree Ventures, but I do invest independently across many venture firms. I'm across 7, as you mentioned. I do private investing as well. I think the sector I'm most excited about is the med tech or health tech sector. What we saw through COVID was the dramatic increase of use of technology in terms of whether it's cloud-based diagnostic services, whether it was video calls for doctors, whichever sort of particular vector you want to take in terms of med tech or health tech. And so coming out of the pandemic, and you've seen the value of these platforms, I think it's an incredibly high growth sector. So personally, I'm very excited about the opportunities in med tech and health tech going forward. I think we will look back and med tech, health tech will have been one of the fastest growing sectors of investment across venture capital.
Well, back in 2021, you did say wealthy in Australia are quite greedy and you wanted to try and help change that. Are you succeeding?
Well, yeah, I think that observation remains a constant. I think what the thesis for Start Giving, which is the not-for-profit company that I founded late last year, is that the tech founder community and tech exec community has a set of attributes that make them a lot more open to philanthropy than rich old white guys, to be honest. Specifically, I think that this group, if you want to use a general set of terms, this group is a lot more socially progressive than the traditional old rich white guys. They are happy to have made their wealth in their companies, by the companies they've founded, but I've not yet met a founder who believes they deserve the money that they have got in their pockets. And I think, as the Canva founders talked about in their blog post, was about they are the custodians of the wealth. It's not really their wealth. I thought it's a lovely way to think about it. And thirdly, I think every founder I've ever met seems uncomfortable with the inequality of life, where luck plays a role. So that was the thesis, and that was the group we were going to talk to. And we've only just started talking to founders about helping them start their philanthropic journey. We're setting up their own charitable foundations, and it's going very well. We've sort of had 10 conversations and had 10 people say, yeah, I want to do something. which is a pretty high hit rate, generally speaking, but I think speaks not so much to the idea, but more to the opportunity. That there's a lot of money being made in tech, even with the corrections that we've talked about earlier in the interview, but there's an enormous capacity to use some of that wealth to alleviate suffering, and that's the goal.
And do you think there's a discrepancy then between the entrepreneur, the founder, versus the salaried CEO?
Yeah, I think there is. I think the founder is really committed to what's going on. The founder is the egg in the fried egg sandwich, right? Very committed. I don't think that salaried executives are. They are, for want of a better term, guns for hire, who come and do a role and do it very well, in most cases, but then move on to their next gig. And usually, yes, they get some equity in the company, but it's nowhere near relative to their net worth as a founder. For most founders, all their net worth is tied up in their company. So they are very committed, and far more committed to the long-term success, I think, than any salaried executives.
Daniel Petrie, it was a pleasure to talk to you. Thank you.
Thanks so much.